The market does not begin with charts. It begins with the fear in your hands. It is that cold, sticky sweat. When the price nears your entry point, you know you should click, but your finger freezes over the mouse. This psychological break costs more than any stop loss. You aren't afraid of losing money. You are afraid of being wrong in your own eyes. The mechanics of loss always start with one small delay, hesitation. The crowd is always looking for confirmation, but by then, the move is already gone. When you see everyone rushing to buy, you have already become their liquidity. The price has already played out your ideal entry. While you wavered, a reliable signal never shouts. It only quietly blinks. False hope is the most expensive fuel for a beginner trader. You buy an asset and it drops instantly, but you start averaging your price. You don't accept the mistake. You simply accumulate the pain, tethering yourself to the asset. It is like pouring gasoline on a fire, hoping it will go out on its own. It is always easier to admit a small loss than to drag a corpse behind you. The price of a mistake is not measured only in fiat money. It is measured in the amount of wasted time. Every failed trade is a burned resource of attention and emotional capital. You spend hours analyzing what happened, instead of looking for a new opportunity. The market collects its tribute for every single doubt you have. This mental fatigue is the worst enemy of discipline. Impatience forces you to jump onto a moving train, the same one you were afraid of. You missed the first move, and now you feel the pressure of missed gain, FOMO. You enter exactly where a wise trader is closing part of their position. You chase the price, and the price uses you as fuel for a correction. Always remember, the opportunity you are looking for will come again. But next time, it will come without the emotions. Inner silence. That is what distinguishes a pro from a gambler. A gambler must always be in the game, always feeling the adrenaline. A professional can sit for weeks and wait without feeling any discomfort. It is the mastery of sitting on your hands while everyone around is panicking or in euphoria. Your greatest profit is often found in the position out of the market. The market maker knows your weakness and skillfully manipulates that knowledge. Their job is to collect liquidity where the crowd sets its stops. They give you a false sense of security, only to sharply reverse the direction. This is just a game on psychological levels, where they sell you the illusion of stability. The market is not a democracy. It is a battlefield of big capital against small players. A trader's success is always measured by their ability to adapt. Yesterday's profitable strategy might lead to losses today. Those who fall too much in love with their method are destined to fail. You must be flexible, like water, and swift, like a snake. There is no magic formula that works forever. Your break-even is a psychological trap that is hard to escape. When a position goes against you, you just want to get out at zero to avoid the pain. You let a profit turn into a loss, simply waiting for your entry point. This isn't trading. It's a game of avoiding the feeling of being a fool. It is better to take a small stop than to be chained to a zero. Accumulating small profits gives a false sense of invincibility. You begin to believe in your own greatness. You increase your sizing, and you lose your vigilance. One big loss takes away all your previous victories, and more. This is the classic story of Icarus. The higher you fly, the more painful the fall. The market is always waiting for the moment. You become overconfident. Information overload leads to decision paralysis. You read too much analytics. You watch too many of other people's charts. All those voices drown out the only important one, the voice of price. You start doubting your own conclusions because someone on Twitter wrote something else. The truth is found only in the price movement, not in the news headlines. Greed makes you leave an order overnight, even though your intuition is screaming to close it. You already have a good profit, but you want just a little more. This last little more is most often fatal for your account. The market doesn't care about your desires. It simply executes the mechanics of liquidation. A closed profit is always the right decision. Losing control over emotions leads to revenge trading. You lost money, and now you have an overwhelming urge to win it back immediately. You increase the volume, ignore the rules, and make chaotic entries. It is a self-destructive spiral that ends in total exhaustion of your deposit. Stop. Take a pause. Step away from the monitor and regroup. Waiting is the hardest work in the market. but it pays the best. You must have a plan, but you must wait until the market comes to your plan. Do not rush the price. Let it reveal its structure. Only when all conditions align do you press the button. Patience is not passivity. It is the active control of your psychology. A bad entry must be cut immediately, without any sentiment. If you realize you were wrong, the price hasn't had time to go far yet. Every dollar you save on a stop loss is energy saved for the next trade. Do not let a small mistake turn into a catastrophe. Trading is the constant management of losses, not the pursuit of profits. Train your intuition, but back it up with clear rules. It is that gut feeling that shouts "get out," even when the chart looks perfect. Intuition is the subconscious analysis of thousands of past situations. Do not ignore it, but do not make it your only criterion. It should be a well-oiled machine, where logic and feeling work in sync. You must know that your stop loss is not a place of defeat, but the price of learning. It is the fee for obtaining new information about the market. If your stop is hit, the market simply told you were wrong. Try again. Accept it calmly. As part of the business process, a stop loss is your most faithful protector against emotional decisions. The market is always looking for your weakness, always testing your will. It can stay flat for weeks, causing boredom and the urge to just do something. This is a test of your patience. Before the big move, those who give in to the boredom lose money on the impulse. The market does not reward activity. It rewards timing. Use a mental stop loss, but not as a replacement for a physical one. It is a psychological barrier that tells you, if the price reached this point, I am out. Even if the order didn't trigger, it disciplines you and prevents you from moving your stop just a bit further. Your main responsibility is to protect your capital from yourself. Before we continue, let's look deeper into the roots of human behavior. If you want to truly master the market, you must first master yourself. I recommend a fundamental work that shaped the mind of every great economist, The Theory of Moral Sentiments by Adam Smith. This is not just a book about ethics. It is a manual on how we perceive gain, loss, and the judgment of others. In trading, understanding self-control and human nature is the difference between a calculated decision and a fatal mistake. Take your knowledge to the next level. The link to the book is in the description below this video. A trader's strength lies in their ability to remain objective. Even under pressure, you see your asset growing, and you start inventing reasons why it should grow even more. This is a cognitive bias that prevents you from seeing real reversal signals. Throw away your fantasies and trade only what you see on the screen. The market is not a dream. It is the harsh reality of numbers. Trading is a game of probability, not of 100% certainty. You cannot know what will happen next, but you can determine where your odds are better. Always work from the worst-case scenario, not the ideal one. If you cannot accept the maximum loss, you should not open the position. This is philosophy, not just mathematics. Entering a position should be as boring and mechanical as possible. No emotions, no extra thoughts about what if. You execute your plan like a robot that knows neither pity nor hope. The less you think at the moment of entry, the better your strategy works. Discipline is the execution of routine. When your psyche resists it, charts and patterns are just imprints of the collective psychology of the crowd. When you see a head and shoulders pattern, you are seeing fear and greed shaped into a figure. These figures work because millions of people react to them in the same way. Your task is to use this predictability, not just blindly copy it. Understand the psychology behind every candle. Always check your initial thesis on the lower timeframes. A big move often starts with a small, decisive impulse. If you see that on a 5-minute chart, the price cannot break a level. That is a warning. Do not wait for the price to reverse on the hourly chart to confirm your mistake. Speed of reaction saves your deposit. The rule of 3 attempts: if you entered a position 3 times and hit your stop 3 times, stop. This means you either misidentified the market context, or the market simply isn't for you today. Do not try to break the wall with your head. The market is always stronger. Step away, review the situation, and come back tomorrow with a fresh mind. Never add to a losing position. It is the path to bankruptcy. This principle is as unbreakable as the law of gravity. Yet beginners always violate it. You have only one chance to prove you are right. If the price goes against you, your analysis was wrong. Accept it. Adding to a loss is the last cry of despair. The key point, your sizing, determines your emotional stability. If you have invested too much, you cannot objectively evaluate the price movement. Every tick up or down will cause panic or euphoria. Trade with a volume that allows you to sleep peacefully at night. A calm mind is a trader's best tool. Profit management is just as important as loss management. Do not let a winning trade turn into a zero. As soon as you get a significant profit, move your stop to the break-even zone. This ensures that you will always take at least something. Protect your profit from sudden reversals. Taking partial profit is a powerful psychological technique. When you take 50% of the position, you take the pressure off yourself. The rest of your position is now playing with the market's money. This allows you to stay in longer without the fear of loss. Fix partially to let the profit grow freely. Do not be afraid to re-enter a winning asset after a small pullback. If you see the impulse is recovering, you must be ready. Many traders fear a second entry, thinking they are late. The market often gives a second chance on a confirmed trend. Be decisive when you see strength. The psychology of profit-taking. The crowd always sells too early when they feel the warmth. You must have a clear target and wait for it, if the market allows. If you constantly take tiny profits, you will miss the big moves. Be patient. When the price is moving in your favor, missed profit hurts more than a real loss. That is a fact. You watch the price continue without you, and it causes anger and regret. Do not let these feelings affect your next trade. A missed opportunity is not a loss. It is just an opportunity for someone else. Again, maintain objectivity. Remember the logic, the market works in cycles, and your success is also cyclical. There will be periods when you cannot find a single profitable entry. There will be weeks when every trade hits a stop. Do not despair, and do not think you forgot how to trade. It is just a phase of the market that requires rest. You must realize that you are the only constant in this changing environment. Assets change, charts change, but your psychology stays with you. You cannot control the market, but you control your reactions. Success is 80% self-control and mental endurance. Jesse Livermore once said, "Don't be afraid that a stock is going too high for you to buy." His experience confirms that the biggest profits come from sitting in a big, confirmed trend. You need courage not to exit prematurely when everyone around is already fixing. Let your goal be ambitious, but grounded. The sleeping order mistake. You set a stop order and stop following it, thinking it will protect you. You must be near the monitor to control the situation in case of a sharp, volatile move. A technical error or slippage can cost you much more. A stop loss is just a tool, not your nanny. Minimize the influence of the outside world on your decisions. Your friends may talk about easy money, your family about risks. These conversations take away your concentration and sow doubt. Trading is a lonely profession, where your decision is the only right one for you. Isolate yourself from the information noise. A huge mistake is thinking you know where the bottom is. Beginners always try to catch the absolute low or high. You should trade what is moving, not what seems cheap. Trying to catch the bottom is a guaranteed way to fix a larger loss. Let the market itself confirm its reversal. Always keep cash. It is your psychological reserve and your liquidity. A trader who is always fully loaded has no room to maneuver. When the market gives you a perfect opportunity, you must have the means to take it. Cash is also your armor against unpredictable black swans. Remember the anchoring effect. You get attached to an old price that you once saw. You remember a stock cost $10, and now you don't want to buy it at $15. This is irrational. The market doesn't care about historical prices. Trade the current dynamics, not your memories. The law of reflection. What you do in the market is a reflection of your inner state. If you panic, you are undisciplined. If you are greedy, you are impatient. Change your inner philosophy, and your results will change on their own. The market is your most brutal psychotherapist. A winning trader always knows their maximum pain threshold. You know how much you are willing to lose in a day, a week, and a month. When you reach that limit, you simply turn off the terminal. This is not weakness. It is protecting your capital from emotional burnout. The market always moves along the path of least resistance. But that path isn't always obvious. It looks for where fewer players are willing to hold their positions. To sharply move there, your task is to identify this crowding and stand on the opposite side. Mastery is the ability to see invisible tracks. Never trade with borrowed money or funds you need for living. The pressure of the fear of losing will kill any strategy. Trading requires a cold head, but debt makes you hot and reckless. Use only risk capital. Otherwise, you lose. Even before you enter. Your best tool is not an indicator. It is your trading journal. Record every entry, every exit, and most importantly, your emotions at that moment. Analyze why you felt fear or euphoria. Only through this self-reflection will you understand your true mistakes. The main law: do not try to be smarter than the market. Simply follow it. The market is always right, even when it seems absurd. Accept that you do not control the price, and it will give you true freedom. Submit to the will of the price, and it will reward you. You will never become a pro if you don't learn to admit your mistakes instantly. Quick recognition of errors is a sign of a strong trader, not a weak one. This is the hardest psychological task, but it is mandatory for survival. Admit the mistake, close it, and move on.